Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're talking about what is better for you as an investor, a stock split, a dividend, a share buyback. What is better? I'm going to give you the facts behind each of them, how each of them could help you in a specific scenario, and then I'll kind of tell you guys what my favorite is and why, as an investor in companies, one is my favorite over all the others by far, guys. So first off, we got to understand what a stock split is. What is a stock split? A stock split is essentially when a company decides that it's going to split its share price so it can bring down its share price to a lower amount so smaller investors can get invested in that. And so basically, if a stock's $100, right, and they want to bring that share price down to $10 the next day, they could announce a stock split. And basically, if you own those shares already, for every one share you own, you're now going to have 10 shares. But your 10 shares are going to be at $10, so equal to what it was for one share before, because one share before was worth $100. So some companies, when they get their stock prices really high, they do that just so they can get more investors, smaller investors involved in the stock. Apple did this. Apple's stock price at one point was like over $700 a share. So they did a 7-to-1 stock split. So basically, for every one share you had before $700, you now had 7 shares at $100 each. So now smaller investors could invest because at $700, they might not have been able to invest. At $100, absolutely, all the smaller investors can generally afford that. So that's what a stock split is. A dividend is when a company actually pays you out money to you personally, or basically all the shareholders, and they pay a fixed amount. So let's say they're going to pay $1 a year in dividends. So for every one share you own, you get $1 in dividends. So if you own 100 shares, over the course of that year, you're going to get $100 in dividends into your brokerage account. And with that money, you can do whatever you want. You can pull it out, you can buy more stock, whatever you want to do with that money, guys. So that's a dividend. It's actually money that's getting paid out to you from the company. So you as a shareholder. Last one, a share buyback. A share buyback is so companies can basically use their money, their cash on their balance sheet or investments or whatever, and buy back their own shares and basically retire those shares. Now, why would a company want to do that? Well, the less shares you have outstanding versus your net income, that means you're going to have a higher EPS. A higher EPS means more money for the shareholders that you can either pay out in dividends or basically just brings down the PE ratio so it looks like an even better investment, guys. So that's why companies do a share buyback. So with that being said, guys, here, what is better? Well, a stock split is better if you're someone that's such a small investor that you can't really afford some of these more expensive stocks like a Google stock or an Apple back in the day, for instance, or an Amazon. Amazon's at like $700, $800 a share. So if you only have, $100, $200, $300 to invest, you can't even really buy those shares. I've heard of companies that you can buy technically part shares in. I don't know if that's true or some brokerages allow that. Most brokerages do not allow that. You got to buy at least one share of that stock. So if that's your situation, then a stock split's the best thing for you. For me personally, I could care less about a stock split because when I'm investing thousands of dollars, usually tens of thousands of dollars at a time, and there are almost no shares out there that are over $10,000, guys. I can't think of one share. Maybe Berkshire Hathaway, but even they have like a separate share that you can buy for like $100 or $200. But I know the Berkshire regular shares are like $100,000 or $200,000 for one regular Berkshire Hathaway share. But how many companies actually have a share price that's in the tens of thousands of dollars or hundreds of thousands of dollars? Pretty much none. It's like 0.001% of the companies out there. Now, also, I don't even care about this because, say my first investment ever. My first investment ever was $257. Even at that price, I could still afford to buy 99% of the companies out there, if not more than 99% of the companies. How many companies actually have a share price over $257? I can think of maybe 5 to 10 off the top of my head. And that's out of thousands and thousands of companies, guys. There aren't a ton of companies that are over that type of price. So even if you're a small investor, you can still buy most of these shares. So that's why I don't personally care very much about stock split. But you may, because like I said, maybe you want to buy those Amazon shares, but you don't have enough money yet. Well, if they did a stock split, then all of a sudden you could actually afford it, guys. All right, so next one up, dividends. Dividends are nice. I like dividends, but I don't love dividends. When I first started investing, dividends were very important to me. They really were. I gave companies that had dividends a lot better shot than companies that didn't pay dividends. But a dividend can matter if you're looking for income to come in. So maybe you have a lot of money invested in a stock. Maybe you're a retiree or something. You have a couple $100,000 in that particular stock. You don't really want to play with stocks, investing and selling and buying and those kinds of things. You just want to have your money in there, collect your dividends. If the stock goes up, great. If the stock goes down a little bit, who cares? You're in it for a long time, 5, 10, 15 years, who cares? You're mainly in that stock for the dividends to be paid out to you. So you want your 3% of dividends a year. So you maybe own, let's say, 10,000 shares and they pay out $2 in dividends a year. Great, you get $20,000 of income basically coming to you just from dividends. So if that's very important to you guys, then dividends are certainly the way to go. Me personally, like I said, I don't really say it's great if a company pays a dividend. I don't look at it as a bad thing if they pay a dividend. I would personally rather be involved with companies that use that cash instead of paying out to their shareholders. Use that cash to build out your business, to create new products, to create new services, to build out the business rather than just paying it out to the shareholders, guys. So that's my personal belief, which is why I don't really care about dividends that much. Next one up is a share buyback, guys. This one I do absolutely care about and I love if the shares of the company are undervalued. Problem is, a lot of companies do share buybacks when their stock is not undervalued. So when you're buying your stock back as a company at an overpriced price, you're basically spending a lot more than you should. You're better off just holding that money on your balance sheet at that time. So companies that are severely undervalued, it's a brilliant thing to do a share buyback because then you can buy tons of shares at a super cheap price, retire those shares, and then your EPS, as long as you can hold your net income the same or grow it, your EPS is going to look like it's exploding just because you're taking a lot of shares off the market. So there's a lot less shares outstanding to count against that net income. So your shares as a shareholder become actually much more valuable at that point because there's less of them out there. So companies that do share buybacks when their shares are undervalued are absolutely brilliant in my opinion. And I prefer companies that are doing share buybacks. I think it's just a phenomenal thing. Now, like I said, if it's overvalued, it's not a good thing. Now, a lot of the companies I invest in, a lot of them happen to be doing share buybacks when I'm buying in, which is kind of a sign not only that I believe that company's undervalued, but the management, the board of directors has to approve a share buyback. They also believe the shares are undervalued at that point. So if they believe it's undervalued, I believe it's undervalued. It's kind of just like an extra good thing in my scenario where not only do I think it's an undervalued share, but the board of directors does. These geniuses, they also think it's undervalued. But like I said, guys, not all the time they're right. Sometimes they're wrong on the share buybacks, and they buy back at a really low price, and that stock goes lower, and they could have bought at a lot lower prices, guys. But share buyback is definitely my favorite, in my opinion. Leave me in the comment section what you guys prefer. Do you prefer a share buyback on a stock? Would you prefer a dividend? Would you prefer a stock split? Is there a particular share out there that you would love to buy, but it's too expensive right now because you can't afford to buy that share? I would love to hear your guys' opinion on this. Leave a thumbs up if you enjoyed this video. If you come across it and you have not subscribed yet, you may want to. I talk personal finance on the channel. We talk entrepreneurship. I'm an entrepreneur and business owner. I give a lot of tips as far as that goes. And we also talk the stock market the most on this channel and how to be a successful investor. Thank you for watching, guys, and have a great day.
Heel gezien was en this had an English had near long sauce. I'm Merle low the Ocean fresh and I near Nicholas fresh little Senex it. Yeah, setting my and wheelshness as it looks hot as it looks hot so nature like a foster first. See, I girl felt that water rate comes in on. See, my nurse had that. Meow, it's a refiam. Oh, you lost never one of it. Well, you're in this Senate. We want mother sheet or how mother sheet. Now he's got for the next week in a matter. That's it. Oh, have a brush up. Suckers had been so you for that zero. I've been across the way, boosting on the 60s, those nine off is it 7 euros me. I asked boosting in order to film us, sweet, needs her, but I was